Hey everyone, and welcome back to the channel. Today, we're ripping open the latest July inflation report, and let me tell ya, it's a real head scratcher. On one hand, you might feel a little relief at the gas pump, but on the other, some key prices are definitely climbing. This report could shake up everything from your grocery bill to those interest rates we've all been watching. So, what exactly happened in July? Overall, consumer prices, which we track with something called the Consumer Price Index, or CPI, rose about 2.7% over the past year. That's actually a little less than what most economists expected, and it's holding steady from June. But here's where it gets interesting. If you strip out the volatile stuff like food and energy, what we call core inflation, prices actually sped up, hitting about 3.1% annually. That's the fastest pace we've seen in months, and it's a big deal for what comes next. Why the mixed signals? Well, a big part of it is our old friend, the gas price roller coaster. Gasoline prices dropped almost 2% last month, giving many of us a little breather at the pump. In fact, gas is down almost 10% from last year. Food prices also stayed pretty flat overall, which is good news for your grocery budget. But don't celebrate too fast. While prices at the supermarket barely budged, the cost of eating out at restaurants continued to climb, up nearly 4% from last year. And some specific items like coffee and ground beef saw notable jumps. Your morning brew is costing nearly 15% more than it did a year ago, and beef is up over 11%. Even everyday items like milk and dairy products saw price increases in July. Now, let's talk about the elephant in the room, tariffs. These are basically taxes the government puts on imported goods, and they're starting to make their way into your wallet. While the overall inflation number looks tame, we're seeing clear signs of these tariffs hitting certain categories. Things like household furnishings, those new shoes you wanted, and even toys saw price increases in July. For example, furniture prices jumped almost 1% in just 1 month. And footwear soared over 1%. Appliances, which had seen sharp increases earlier, actually dipped a bit in July, but the overall trend for imported goods is upwards. Experts say that while businesses have tried to absorb some of these costs, they can only do so for so long. We're expected to see more of these tariff costs passed on to you, the consumer, in the coming months. One estimate suggests the average American household could lose around $2,400 in the short run because of these tariffs. Beyond tariffs, other essential costs are still rising. Housing, for example, which is a huge part of most family budgets, continued to get more expensive. Shelter costs, including rent and home ownership expenses, edged up another 0.2% last month. While the annual increase in housing costs has slowed, it's still a significant pressure point. Medical care services also saw a substantial increase, and even transportation costs like auto maintenance are rising. So while gas might be cheaper, many of your other everyday expenses are quietly getting pricier. This complex picture puts the Federal Reserve, the Fed, our central bank, in a really tough spot. Their job is to keep prices stable and ensure as many Americans as possible have jobs. With core inflation rising, but overall inflation holding steady and job growth slowing down, they have a major decision to make. Many on Wall Street are betting big that the Fed will cut interest rates next month in September. The odds are extremely high, with many predicting around a 90% chance of a rate cut. Why? Because the job market isn't as strong as it initially appeared, and the Fed might want to act to support employment. However, some worry that if the Fed cuts rates while prices are still heading up, especially due to tariffs, it could lead to stagflation, a nightmare scenario where prices keep rising even as job growth slows down. Fed officials themselves are divided on whether the tariff impact is a one-time thing or if it will cause a longer-lasting price surge. This uncertainty makes their job incredibly difficult. After the report came out, the stock market actually cheered, with the Dow, S&P 500, and NASDAQ all seeing strong gains. The dollar, on the other hand, weakened as traders anticipated lower interest rates. Gold prices, often a safe haven, held steady. Adding another layer of complexity is the recent drama surrounding the Bureau of Labor Statistics, or BLS, the very agency that puts out this inflation data. The former head of the BLS was fired by the president after a weak job report, and a new chief who has been critical of the agency has been nominated. This has raised concerns about the reliability of the economic data we all depend on. The BLS has also been impacted by staffing cuts, forcing them to rely more on estimates rather than direct measurements, which some worry could affect accuracy. These numbers are incredibly important. They impact everything from your Social Security benefits to federal tax brackets and even the value of certain investments. Trust in these numbers is crucial for our entire economy. Looking ahead, we'll need to watch closely as these tariffs continue to work their way through the economy. The full effect might not be felt for several more months as businesses slowly pass on costs. The Fed will be scrutinizing every piece of data between now and their September meeting. So, while July offered some relief at the gas pump, the core numbers tell a story of persistent price pressures, largely influenced by tariffs. This is a delicate balancing act for the Fed, and their next move could significantly impact your finances. What do you think about these numbers? Let me know in the comments below. If you found this breakdown helpful, please like this video, subscribe to the channel for more updates, and don't forget to hit that notification bell so you never miss out. Thanks for watching, and I'll see you in the next one.